Good afternoon and welcome everyone to the Trading Talk Uncensored live Q&A session. My name is Danny and I will give you the webinar today. We're going to review the questions that we receive here and we will see what's the best way to answer. We will also use the web trader to have our webinar today, which to access the web trader, all we got to do is just to log in with the email and password without the need to download or install anything as an addition. On top of that, I'm also going to show you, let's first paste the question. Okay, the question is, are there any commissions for deposits or withdrawals, and how long does it take? Okay, so typically, first of all, let's talk about the commissions. So we've got deposits and withdrawals. No commissions. AvaTrade for deposits. Let's say deposits. So AvaTrade does not charge any commissions to make a deposit. The bank or the paying method can charge a commission, but not AvaTrade, not for deposits, and not for withdrawals. And also, we're not limited to withdraw or deposit any amount, so we can do it freely anytime. Now let's also speak about the time. So the time length, time to withdraw can differ, obviously, depending on the method that we're using. Time to deposit will be, I don't want to make any commitment, but time to withdraw can differ from let's say 1 to 10 days, depending on the withdrawal method. Okay, and time to deposit can also be 1 to 10 days, but if we're using an online method or a card, that can even happen instantly. So what I'm going to do is I'm going to add here time to deposit. So from instantly, almost instantly, minutes to hours using online method or a card, transferring directly from the bank. It can take up to 10 days. Again, typically it's much less than that, much less than that. But that depends on the paying method. So obviously, if I'm using the bank, it might take it a bit longer. If I'm using a card, so like we said, minutes to hours, using a method such as a card, maybe I can take the same thing in here, because to withdraw, that can happen almost the same time frame. For any kind of assistance related to deposits or withdrawals, as I always mention, you can contact your senior account manager. Your senior account manager is there to help you exactly with that. Yeah, so regarding the commissions, as we said, there are no commissions. How long does it take? We just wrote how long does it usually takes. So as an answer, I think I can take this quite collectively and paste it right here, and just type AvaTrade does not charge any commission for deposits or withdrawals. The bank or the paying method can charge a commission. Okay. Regarding the time, so we're just gonna leave this as it is. Maybe fix the size and the font also. Maybe make this 10 as well. So 10, yeah. Time to withdraw, to deposit or withdrawal will be minutes to hours using an online method or a card. Transferring directly from the bank can take a bit longer. Yeah. You can send your senior account manager a proof of payment and he might be able to brief the process. The second question that we have here is, can I be profitable as soon as I start trading? The answer is basically, the answer is yes. If it's, we're talking about the possibility, if it's possible that someone will be profitable right from the get-go. That depends on the plan, that depends on the preparation. So for instance, if I have no practical experience and I studied economics or trading as an example, and then I come with a little bit of background and I have a very good plan and assistance, I might be profitable right from the get-go. But to tell you that this is a very common phenomenon, and you know, everyone make profits right on the start, unfortunately, that's not the case. Usually there is a learning curve like everything else in life. I can't come to the gym and be a bodybuilder right away. I mean, some people can, again. So like I said, there are exceptions for everything. But if the question here is specific, is looking at the average, I wouldn't say that the average is profitable right away. There is a learning curve. We have a lot of tools right here to show you we've got an academy and videos and account managers and a lot of ways to give you content for you to be better. But let's try to answer the question with the right preparations and background. Okay, the right preparations and background and a good strategy, it's possible to be profitable right from the start. A more common phrase will be more common process will be learning the basics, making mistakes, making improvements, and that's just quite it's quite like a cycle. So we learn a certain technique, we learn how to use it in the chart. Sometimes we don't get it perfectly right on the first try, not even on the second try, and then we repeat the same process until we get a better grasp on what we're doing. Then we can improve using different techniques, indicators, other assistants, just to make the process a bit more understandable. And once we have it systematically, then we can even call it, we can give it a name, we can call it a strategy, but at the end of the day, it's repeating the same things, usually looking at different situations, looking at different time frames. I find it extremely helpful. Some might say otherwise, but I think switching between time frames before making a final decision about your analysis, not just judging the chart, but by one day, maybe looking at the weeks, go checking the news, seeing the reason of why it happened, then going back, changing to another time frame, just to ensure that the decision that we're taking is not in a too small, and that the scope is not too small, but we're getting the large picture. We know what's happening, and then I find it extremely helpful to get to a wise decision. So what I'm basically trying to tell you guys, it's I guess the question here would be, you know, if you can be profitable from the start. So in other words, the question is asking, can I be profitable fast, right? From the start means fast, with no process, with no, you know, and like I said, as you can see, I wrote what I think about that. I think even if we're profitable and we haven't done the process, so it's not really something that we can maintain. But some may say otherwise. It's just my personal opinion. I think that we also should enjoy the process and not just think about how to make money fast. Okay, now so let's paste the answer in our presentation so we can carry on with ease. We can see that the following question here is, just a second, we'll also change the font. Let's put this, delete what we've got here. There we are. Okay, the following question is, what is better, manual trading or copy trading? Okay. Let's talk a little bit about the differences. So manual trading will be me personally, just a second, manual trading, personally opening and closing the positions, making my own analysis on risk money management, and own profit and loss. Copy trading will be the other way around. Everything happens automatically. Which leaves us no choice in terms of the strategy. In some variations, like our app is an example, I can determine to have a lower lot size, which gives me a little bit of control on the risk money management. But in terms of strategy, analysis, and those kind of decisions, I have no control at all. So copy trading will be automatically opening and closing positions. The other trader is doing the analysis. The analysis, risk money management, and profit and loss. In other words, in this scenario here, when we've got almost no control, we're depending basically on the success of the other trader. So if the other trader is sophisticated, experienced, having well-performed strategy, we're just gonna ride on that and make money out of that. No problem at all. We can even, by the way, we can even have hybrid strategy when our strategy is combined with a sub account that has copy trading running. That lets us expand our strategy, see how other strategy works, and in this we can have another account. So we can have sub account A will be for this. Oh, something happened. Sub account A will be for this. Yeah, and sub account B will be for that, for the copy trading. This way I can basically understand if my strategy can be improved, how it can be improved. I can make comparison if it's even worth for me to do copy trading, because I might bring myself to a point with manual trading that my manual trading performs better than the copy trading. Okay, copy trading can also be a huge time saver if it goes well, because again, it doesn't require me to do anything. I'm personally gonna, I'm practically gonna link my account to somebody else's account, and if it works, it works. So that can be quite amazing. I would recommend in both cases, and before doing one of those things, is to have the basics and to make a decision based on something that you have a legitimate reason to do that. So for instance, if I've got a lot of free time, very good financial background, a good understanding about the economies, copy trading might not give me what I'm looking for. If I don't have a lot of time, I don't have a lot of knowledge, I don't have a lot of money, and I just want to see how it goes, copy trading might be the solution for me. So I also need to check what kind of an answer I'm looking for. If it's the first option, the second option, maybe both of them, if I'm already at a point that I'm checking things out. So both are great. Both are great. I cannot say what's better, but I can say that if you have the proper preparations and you've got a little bit of research to see what fits you better, you can get to a better decision. You can get to a wiser decision. That's what I can say. And of course, as I always mention, for copy trading, we've got AvaSocial copy trading. Okay, the way that it works is super simple, as I've explained. We'll link our account to somebody else's account. It runs everything by itself. The positions will open similarly to the trader we're copying. And we can even modify the lot size to be a smaller lot size in case we want to. An example that we want, why would we want to do that, is, for instance, if we're copying a trader that has a bigger amount or a smaller amount, and we would like to make the adjusted margin to fit to the strategy we're copying. So it gives us the ability, like I said, to have a better, maybe give us more control on the risk money management. That's basically what it does. Let's copy what we've got in here, paste it in the presentation. Great. Maybe make it a bit smaller so it will be easier for us to handle in the presentation. Okay. It does seem like I made a little bit of mess here, but I'm really trying to keep it organized for you guys, so later on you can there we are. Okay, the last question that we've got is, can I use AI to do my analysis for me? Well guys, the question here is actually very, very fun, because my opinion about AI is not simple. I'm not going to tell you, a long story too much now, but I can say that AI is basically a very, very neat shortcut to get information. Not always accurate, not always helpful, and not always legitimate, but it's a way. So if we're using AI as an example, we need to know what AI we're using. We need to know to what extent we're using it for. So am I using AI to trade for me? Am I using AI to assist trading? Okay. Am I using AI because I don't want to learn or to save time? Okay. Am I using AI to, like it's written here at the top, to get more familiar with the fundamentals, okay, or the technicals? So I think that AI is a remarkable tool that can be used for various things. I wouldn't use it as an absolute tool, and I wouldn't use it to an extent that doesn't allow me to trade, because first of all, I'm not gonna say if it's good or not, because I haven't tested it to tell you guys if it's good or not, or if I recommend. I can't recommend anything that I haven't checked, at least not to that extent. I am, by the way, I'm using AI all the time to get more familiar with the news when I don't have time to read. It's the same as searching in Google rather than to ask Google, right? But I'm not going to ask AI to make me a strategy. You guys can feel free to do that, and it might turn out great. But from my experience and my own personal opinion, I'm using it mainly as a shortcut for information. I'm using it mainly as a shortcut for information. The decisions are solely mine, and I like to keep it like this. But to answer the question and to answer it straight as much as I can I use AI to do the analysis for me? Yes, you can ask AI for any information about analysis or the market. Highly recommended to check which AI and to what extent we are using it. So if, for instance, I'm asking my AI what was the result of the NFP that, well, NFP is next week, but CPI or PMI or any other report that I'm looking for, and I don't want to go onto my computer and it takes a few minutes and maybe I'm too busy for that. So it's okay to ask, the results. That's what I think. But to rely to open a position on AI's decision, it might work, it might not. I'm absolutely not going to recommend you guys to do that at any way. So that's what I think. Of course, other people can think otherwise, and that's great. That's what makes our world so beautiful. But that's my opinion on it. Okay, so if there are any other questions about the what we've learned so far, or even this question, feel free, guys, to write it down. In the meantime, we're going to carry on with ease to the part where I can show you the information and the links. And I'm also going to show you, as I promised in the beginning, how to get to the here without to even leave the website. So the first link that I'm going to show you will be the AvaTrade education, which basically allows us to get more education. I really hope that you guys can see what I'm sending, because I have no way to verify that other than the software. And okay, now it seems like it worked. So I'm sending it over the chat. It should appear at your lower right of your screen. This link is for a real account. If you're still with a demo and you want to get down to business and really, learn from the, get on the charts. This one is for the academy. I'm going to show you in exactly a few seconds how to get there from the website. And the last thing that we would like to do is to get the general idea of how the candles are constructed. So as you can see, there are two types in here: the technical analysis and fundamental analysis. If I'll go onto the chart, it doesn't really matter what chart. Let's stay with Aussie versus Canadian dollar. We can absolutely see the support and resistance in here. We can have a price line, stick it right here at the top, another one at the bottom, another one in the center bottom, and another one at the center top is already marked. It's 0.89804. And then we've got this nice little difference, which we can also validate with the Fibonacci. We're not too far from the Fibonacci retracement. And then with this in mind, we can understand a bit better how to analyze the situation we're looking at in here. So as we can see, there are different types of candles. For instance, we see some hammer here. It's more like a dragonfly, but we can maybe call it a hammer. We've got a reversed hammer in here, so we've got this pattern in here, which turned around almost fully, and then broke the resistance, went down again, and we can find those thin lines coming out of the candle, which gives it a dragonfly or a hammer, whatever you want to call it. But at the end of the day, what exactly are those thin lines? So we see a candle that looks like this. We see a candle that looks like that with a thin line bigger than the candle itself. If I'll click here on the arrow and I'll click here on the crosshair and then I'll point on the candle, then it's going to show us, let's take the red, let's take this one actually. Okay, and we can read, so we're going to take the rectangle, put it right here. You know what, let's stick on this, stay on this, and the reason that I would like to show you this is very, very simple. If we look at the size of the candle, we can see that the open and the close here are 0.89271, the close is 0.89242, so that's a difference of roughly 30 pips from what we see. And if we're looking at the rest of the candle, we see that the high was actually 0.89308 and the low is actually 0.88756, which is actually 100 pips more. So what why the how is this possible? How the body of the candle is so small and this candle is red, right? And the difference is so big between the high and the low to the open and the close that something here is not adding up. So the reason for that is the color of the candle is solely determined by the result being higher or lower than the open, meaning that this candle could be 1,000 pips higher, but if it closed lower than what it started, it's still going to be red. It's still going to be red, okay? It doesn't matter. The only thing that matters in terms of the red or green is the result. If the higher was lower, if the close was higher than the opening, if it was higher, it's going to be green. If it was lower, it's going to be red. That's the only thing that determines the color. But if we pay attention and we see that the movement was not that, the movement was much more significant, and it even broke the support line. Sorry, no, it did. Excuse me. It did not. It did not break the support line. It did not. Okay, this is the support line. It did get. It has gotten to the similar level, but it didn't break. Okay, because this is the support line, but it did turn around, which gives us the reason to think that it will like some sort of a rubber band, right? If I will something happened with the screen, if I'll pull it down, so what can happen is it can come back just as fast. So this could help us identify good entries, support and resistance, and there is much more a whole universe for the candlesticks which you guys can learn about, but not today. I also want to explain a little bit about how fundamental analysis works. So basically in this template we've got previous forecast and actual. Typically in an economic calendar you're going to see something similar. So if we'll go to discovery and then economic calendar, we can see that in the economic calendar, we've got something similar. So in every event, we've got previous forecast and actual. So, oh, okay, we got the NFP selected. Now we refreshed and see everything. So we see that for every event, for every event, we've got the previous forecast and actual, and we've got the impact. And it says exactly what it means exactly what it says. Previous is the previous result, forecast is the range of what we're expecting, and actual is the result that we received. Now, If we're looking at, we're looking in here in the presentation, we see that it's marked in green. The actual here is marked in green. So if the last result was 177,000 and the forecast was 130,000 and the result was 200, it's higher than the last. Not always it's going to be green. An example for that to be negative will be if we're measuring something negative. As an example, if we're measuring inflation, if we're measuring the jobless count, if we're measuring any kind of negative parameter. So in this case, if we're measuring something negative and the number is higher, it means that it's deteriorating and not improving. Okay, so pay attention to that as well. And also the same thing that I said about AI, also check your resources. If you're doing it from here, from the economic calendar, amazing. We can also use the market buzz to get more specific news about companies. But if I'm looking at a website and I'm seeing somebody else's opinion about a certain company, it could be something else. So make sure that the resources you're using are reliable and it's not just someone else's opinion. It's Bloomberg or any other certified source for you to do that. And then of course it's a very good thing to do. Fundamental analysis, like I said, there are ways like this: the economic calendar, the where we are is the market buzz. There are lots of a lot of ways for you to do it. Okay, but mainly if we're checking generally any kind of event and it's not negative, but it's like the NFP, PMI, or CMU, for instance, those kind of events, if the result is better, we can look at the market, we can expect the market to respond positively. Okay. So before we say goodbye, I want to give you guys a little benefit here with a one-on-one premium market review. You can get that from your senior account manager by giving him the special promotion code, the Q&A benefit, which I'm also going to paste right here for you guys to enjoy. I think it can be very helpful to have a session with your senior account manager, just you and him on the chart. Ask any questions you want live, and this could be very, very good. Like I said in the beginning, the recording will be uploaded to our YouTube channel for you guys to review in your own time, as many times as you want. And you can find a lot of useful content in our YouTube channel, regardless to this webinar, which I recommend you to explore. You're all welcome to join us with the webinar next week. Until then, I wish you best of luck with trading. Have a fruitful week and have a good